Hello, everyone. Jeffrey Nance here. Welcome to another edition of Tip Tuesday. We are starting a two-part series this morning where we are going to be talking about paper trading. So today, mainly going to spend time going through the actual process. How do you set up a paper trading account? What does it really mean? What does it really do? And then how do you do it? The physical, like how do you push the buttons? How do you make this work? What does that look like? How do I navigate through that? So we're going to spend some time doing that today. And then next week, we're going to talk about why. Why should I paper trade? Why is it important? What can I really gain from it? It's not really real money. So am I going to treat it the same as I would a real trade? So we're going to go through all of those things next week. But this week, we're primarily going to focus on the physical. How do you push the buttons? How do I trade this? How does it work? How do I get it set up? All of that stuff. So that'll be our primary emphasis for today. So let me share my screen here. All right. Very good. Okay. So now let's go over here. And so at this point, let's just kind of start at the very basic, like first step here. So the first step is, okay, I want to do some paper trading. What is the process for doing that? Well, the first thing to do is obviously find some broker that allows paper trading. Surprisingly enough, not every broker has paper trading set up. There are several that do. If you're signed up with Charts by Tradeway, then they allow paper trading through that. That's what we're going to be using today to walk through this process. If you're part of Thinkorswim, TD Ameritrade, they have a paper trading account. And there are, like I said, several others out there, but there are plenty that actually don't have paper trading accounts. So you would have to kind of do that in your search of figuring out, okay, so I got to open up a broker. Which one do I want? That whether or not they have a paper trading account, I mean, it could be a factor in determining kind of which one you want to go with. But certainly, with Charts by Tradeway here, we have a paper trading account. So when it comes to the process, now we're just going to kind of go through what this would look like. So we're going to assume that you started out over here. You went to your S&P and you said, what is the overall market doing? And what we know right now is the overall market is kind of like, like just pick a direction and go with it. Right now, so we kind of had that failed W right there where it made a W, but then went flat. Really kind of weird, really odd, strange, not something we would normally see. So here we are over here, made a W, going flat. So it looks pretty similar, I think, to what we're going to see here. So not a lot of clarity right now. So obviously, when we don't have clarity in the market, that might make us a little bit more hesitant to go get in, actual trades, unless we just felt really, really good about a particular pattern. So on Monday nights, we have a couple of different groups, and we have study groups, we call them. We go in there and we actually look at different trade setups. So we have stocks, we have options, we have credit spreads, debit spreads, and then we go through and we look at trading opportunities for these. So we just did this last night. So I've got some of these up here still, and obviously we would have looked at them last night, but one of them that we looked at was Walmart. So Walmart is actually doing quite well today. Nice. It's always good, right? It's always good when we go through and we look at some of these and they end up doing pretty well. And obviously Walmart is doing pretty well today. Up above the EMAs, probably headed to the 50-day. So now that we've kind of said, okay, market tone is we'll say neutral, which is kind of where we left off last night. Could go up, could go down, could go sideways here. At least for this week, or at least maybe till we get some information from the Fed, and then, sometimes that matters, sometimes it doesn't. So we'll see, but we could see some sideways action at the very least. Walmart is a strong looking pattern up above the EMAs with the potential to make it up here to the 50-day, which would be about 129. So at this point, is when we would have to make that next decision. So now, assuming that I've been through all of our 4 basic courses here, step 1, 2, 3, and 4, I could buy the stock. I could buy a call option. I could do a bull put credit spread, or I could do a bull call debit spread. All of those are opportunities for me to make money as the stock moves up. So, of course, then I would have to decide, well, what do I want this to look like? So, what I thought we might do is let's just go through and kind of see what this would look like. So, we're going to go down here. You see it says My Choice Trade Virtual. All right, we're going to go to Order Ticket. And so let's just start off real basic here. So we'll type in WMT. That's our ticker symbol. All right, Walmart. Okay. Now they've got a bid of 126.78, ask of 126.84. That's kind of weird because normally for stocks you would have a bid ask spread of maybe a penny or two. So I don't know why they're showing us that big of a spread. Nonetheless, here it is. So we'll go back here. So stock ETF. So that's what we're doing. We're looking right now at buying the stock. So now you can see over here, it says my action. What is my action? Well, we're trying to buy, right? That's what we're thinking about doing. So I could buy anywhere from, 1 to however much. Now, obviously, it would depend on how much you had in your account. I don't know how much I have in this one. I don't know if it's like 100,000, 200,000, something like that. But well, you can also adjust that. But let's just say we wanted to go down here and we'll just buy like 10 for now. All right, so they're 126.84 a piece. Now, obviously, I can adjust that price. Yeah, because depending on where it is at the exact time, I want to get the best price I can. So order type limit. Now, normally when you're buying stock, you're just going to do a market order because you just say, just give me the price. Whatever you say the price is, just give me that price and I'll take it. You can see that 10 shares at 126, they're saying basically 84, would cost me $1,268.40. Let's review it. All right. So do we want to buy 10 shares of Walmart, market order, time and force day? Yes. I don't really want my time and force to be anything besides a day order because basically things can change, overnight. And if I don't get in today, I may not want to be in tomorrow. So time and force would stay the same. And then basically if I wanted to do this trade, I would go over there and hit submit. Right. So then we would be in this for a paper trade. It would show up in our account positions, and then I could watch that. And it would show me based on what Walmart is doing, whether or not I was making money or not. All right. Easy enough, I think, right? Easy enough. All right. So what about when it comes to options? So you'll see over here, it says options and multi-leg. So option, basically, straight call, straight put. Since we think this Walmart stock is going up, obviously we'd be looking at calls. So once I clicked on calls, it would just be a matter of saying, okay, what is my time period? So my expiration date. Am I looking at a weekly? Am I looking at a month, 2 months, 3 months, a year, a leap? What is my time period here? And I would have to determine those based on what I wanted to do. And of course, what we teach here at Tradeway with our step 2 seminar. So obviously we're going to go down here to a call. Now you can see it says buy to open. So just remember that one contract is equivalent to 100 shares. It is going to have a default. I don't know why this paper trading account defaults to this particular date. Normally, they will default till the nearest expiration date. And since Walmart has weekly expirations, normally it would default to the weekly. So I don't know why it did that. It also defaulted to the 127 strike. Now, obviously, today isn't about going into picking strike prices and understanding intrinsic value and time value and how those things are related and what they do. We're not going to look at delta and all that stuff. That's not the purpose of what we're doing here today. We're going to assume that you've been through our courses before you try any of this and that you're using this. But yeah, so let's just go through the process and say, all right, let's just So I don't know, they're giving me, so these are the weeklies. So let's just say I wanted to do this week's expiration. So this thing expires on Friday. You can see right here, it's July 15th. So 3 days till expiration. That's what the little 3 in parentheses. So obviously this is Tuesday. So we have Wednesday, Thursday, Friday. They're not counting today. So Wednesday, Thursday, Friday to expiration. Not very long. As we scroll out here, you can see they're going to add 7 days to each of these. These are all weekly expirations. But you can see here we can go out as far as, January of 2024. Now, obviously, that's a leap, as is this one right here, the one that expires in 2023. So these are called leaps. They're long-term expirations. So depending again on what we thought, what we were trying to accomplish, there's several different things that we could do with this. So for now, we'll just click on this one. This is essentially basically an at-the-money call. You can see here that it's not very expensive. 106 by 111, very fair there. Okay. We could adjust the price here. Obviously, they're trying to give us, a price that's a little higher than what we want. Let's see. I don't want to get rid of that one. It's still holding my other one. All right, so $1.11, but let's just say I wanted to try to get a slightly better price, and I could go down here and say, all right, you got $1.06 by $1.08. What's kind of fair? Well, let me give you like 2 cents, maybe 3 cents. We'll give you an extra one. I'll make it $1.09. So I can change it either here. You can try to drag this thing across. There we go. It did it. Or you can just manually go in over here and switch it. Obviously, order type is limit. Again, we're going to review, just make sure we're doing what we think we just talked ourselves through. Buy to open, that is correct. That's what we're trying to do. We're buying the call option. We're opening this position. Time and force day, and we're saying basically, a limit order of $1.09. So one contract is going to cost me $109. We'll submit it just to see what it says. I can journal these things too. Let me just click no for now. All right. It says status is live. That means that they haven't executed it yet. They're still thinking about it, because when I entered a limit order, I said you have to give me $1.09 or less, which, by the way, is a really fair price, and it should be giving us that. But they're not, so they're waiting on it. So we'll kind of see how that plays out here. But waiting on that one. All right. So let's go back over here to order ticket. Now you'll notice here where it says multi-leg. Well, essentially a multi-leg trade is a trade that, seems reasonable enough. Involves multiple legs, more than 2, right? More than 2. In particular, when we do our spreads, it's going to be primarily, and we have some that are involving 3 legs, but most of our trades are involving 2 legs. Okay. So let's just say I didn't want to do a particular setup. I want to do a multi-leg trade. I would have to kind of establish what I wanted that to look like. There are some ways that you can do this a little bit differently, which I think is a little bit easier, particularly if you're a newer student, to do it that way. The way that they set it up here, it's a little tricky to do it this way. So you'd have to, you're gonna have to know what you're doing. I'll just say it that way. In order to do a multi-leg trade, just through this process, you're gonna, like I said, this is not really what you would want to do at all. And there's a much quicker, easier way to do this too, by the way, if you were not on this screen. But let's just say we were doing a dollar wide debit spread here. They're saying it's going to cost us somewhere between 39 and 49. Okay, well, we'll do 45 then. All right, so the less I pay, the more I can make. If I'm paying 45, I have the potential to make 55. So I'd rather do that. And then we can say, all right, number of contracts. We've got 1 going on here. Again, we can review. Is this what we thought we wanted? July 15th. That's this week's expiration. 127, 128. Cost me $45. All right. We'll submit it and see what they say. All right, so there's a little disclaimer. Okay, thanks. Appreciate it. Got it. We'll go ahead and continue here. All right. And then again, it says pending. Oh, they did execute our previous one. Notice we put in a limit of $1.09, and then we actually got it executed at $1. So, oh, is that good or is that bad? Well, what that means, unfortunately, is that Walmart is falling. So we look over here at a live chart, and sure enough, since we've been trying to get in this trade, Walmart has been falling. So we got a lower price. Yay. But we really wanted Walmart to go up. Now it could turn tomorrow. Remember, we still have, even with the short-term expiration, we still have 3 days to go. So there's plenty of time for this thing to turn and go up and for us to make money on it. But the reason we got a better price than we thought is because the stock went down instead of up. Oops. All right. So we're still waiting on this one. Could be approved. We'd have to look at that. So there we go. So we did a stock trade, we did an options trade, and we did one multi-leg trade here. And now what you guys would be able to do is you'd be able to follow through with these things and basically just see how they're working. So you kind of go through this stuff and you look at it and go, okay, well, how are my trades doing? When I'm looking at my account here, how are my trades doing? Well, so far, it cost me some money to do this trade, but it's okay. I haven't really lost any money yet, right? So we can see how it goes. Let's look over here and see positions. All right, what's it telling us? Oh man, I'm down $10. Okay, all right. Well, bummer. So this thing that I bought for $1 is worth 89 cents there. So I'm really down around about 11 cents. So really it should be down about $11, but it's okay. And so all I do is just sit here and I watch this. And now once I'm here, I would be able to treat this like any other position. So if I don't really like where Walmart is going and I feel like, you know what, I want to get out of this thing. It's not looking good. I mean, let me go ahead and close this thing. Well, I could go in here. Now it says sell to close. And I would, again, just review, 98 cents. So if I sold it for 98 cents, I would lose basically 2 cents a share. I'm going to let this ride because I don't really need to sell it right now. But that's it. So I again, you set your price, you hit review and you see what happens from there. And that's paper trading, guys, right there. So now you can see over here on our chart, it's showing us a couple of different things because it's following what we're trying to do. Now, this in particular is charting my debit spread, which for some reason they didn't execute, which is kind of weird. I would have thought they would have, especially with the stock falling like it was. But let's see here. Order ticket. They did that one, but they have not done our other one. All right, still haven't let us in. Yep, we got in the other one too. So now we're in both of these. All right, great. So we're in both of these now, and we'll see what happens with them. But I can follow these and do whatever I want to with these trades now. And again, now I am paper trading. So it's not real money, but it's allowing me to go through the process. And it's good to get used to pushing the buttons, thinking through the process. And as you do that, it will help you get more comfortable so that when you get ready to put in real money, you'll be familiar with the process. You won't be having to think through that. You'll just kind of know how things work. You'll know how to, get out of the trade whenever you're ready. You could go in there and figure, you can mess around with stop losses and things like that. So anything that we're teaching you, anything you want to do, you can do that here. You're trading it as if it's a real trade, except it's just not real money, which is really kind of a nice benefit. So you can do the stuff you would normally do, see how these things are working without, maybe actually losing real money. Now, what if the trades really work? Now you'll be like, oh no, I'm not actually making money. So that would be, a little frustrating. But again, that's the whole idea here, is that we get to go through that process. We get to deal with the emotions, but within the context of a paper trading account. All right. Well, that is our Tip Tuesday. I appreciate you guys being with us. Hope that you enjoyed that. If you do have any questions for us, let us know, and we'll be back again next week. When we come back next week, we'll actually talk about why I would actually want a paper trade. So what are some of these benefits, and how can I really walk through this, and where would it be beneficial to me? Even if I'm an advanced trader, why would paper trading be beneficial? So whether you're a newer trader or you've been doing it for a while, what are some of the benefits of paper trading? We're going to talk about that a little bit more next week. So thanks for being with us. We'll see you guys next time.